Welcome to this week's review, which is titled How to Differentiate Between Low Risk and High Risk Setups in Your Plan. And that's because I'm at the end of my 4 week, phase one of my trade building protocol, which is a 4 week uh, period of taking every trade according to the plan, regardless of whether it was high risk or low risk. And coming out of that, the next phase of this is taking low risk setups only. And as I'd only defined what high and low risk setups are before starting phase one, I knew that this would be a critical point to sort of solidify or clearly define whether my initial interpretation of high risk and low risk was valid, to then be used in this next phase, or if there would be some refinements. So now that I feel like I've had, you know, has essentially been 5 weeks because I defaulted in week one and had to start again. 5 weeks of building data on low risk and high risk setups, which has been a key tweak in this next 4 weeks. I thought I'd just share what that process looked like with you. And yeah, hopefully that contributes to the development of your own plan. Yeah, as much as it has with mine. And so in this last week, 5 trades taken, all 5 met the plan. 4 were high risk, one was low risk. And yeah, we've ended the week 1% lower. There was one partial profit in this, and then 4 losses. 2 of these were partial losses, and then one, and then yeah, 2 full losses. Um, so yeah, that all balanced out brings us just below a 1% drawdown. And then this is just the Alpha Capital terminal, just for accountability. I think most of the time will be spent in the next 2 tabs. But yeah, current equity sitting just below 3%. Um, so about 3.2% drawdown at the moment. And we're about 27 days in. So about a full month into, this is 27 trading days. We're well within a full month of this challenge. We started on the 21st of October. So about a month and a half in. And so starting with my review, over this period, which has spanned 21 trades, I started on the 4th of November, the phase one. Um, with each forecasting session, with each backtesting session, reviewing session, I would always make note of any observations that contributed towards rather just the development of my plan. I wasn't too specific in what I was looking for. It was just any insights that came to mind, I would jot down. And over that 5 week period, I've basically just plotted all of those down. Now, in doing this, I'm conscious that some of these questions will contribute towards how I refine my definition of low risk and high risk, and that some of them are not for now, but should be noted because they will in some way contribute to the overall development of my plan. And that I think goes without, that goes for saying with anyone as they look to refine their plan, is you will always have things that you're observing, but you need to find an efficient way of incorporating new information, because you can't also do it all at once, because then you don't really know where the biggest tweaks are coming from. And so going into this, I knew that the key objective was just to refine my definition of high risk and low risk. And so I only wanted to focus on the questions that could contribute on that. And so that's what you see highlighted in green. The red questions are questions which are just, this don't relate to what I was trying to achieve. And then the orange highlights are questions which could have, but I was a bit on the fence. And so ultimately then how I refined that list was then just looking at which, so looking at the green highlighted questions, and then from that I refined it down to 20% of the initial list. So, for example, I had four, or rather five questions highlighted in green, but two of them pretty much meant the same. That being this first one, and was that one? What time to establish reservation? Yeah, okay. It was, yeah, these four, because this last one was more of a management type question. So one, two, three, four set up questions. And then coming down to four, so I had four on this list in my 80/20 refined list for the risk rating update. Um, I went or came back to saying of 80% of your results stem from 20% of, what's the saying? I've actually lost the saying. But you know the whole 80/20 principle, and how 80% of the results or outcomes stem from 20% of your actions or something like that. And so I knew that from this list of effectively, at the time, what was 12 questions, um, I needed to refine that down to the 20% that was going to make the biggest impact. Getting down to four was, I guess, the easier part, because I had a clear filter of which questions relate to what I'm trying to achieve. And then the harder question was getting down from obviously four to the two questions that would make the biggest impact. And then of those, um, I settled on whether a 15-minute time-based liquidity sweep, which occurred in a 4 hour, 1 hour key indicator area, um, was of significance, as well as what time the move began, which established the true open of the day. And that effectively filtered out, defining a time-based liquidity and key indicator area in my trade parameters, which, to be honest, could be incorporated to one, at least this one, which, I then said, okay, I'll take that out. And then the second was, what is the ratio of wins to losses on entries which are taken on an impulsive 4 hour candle counter to my entry? This is something I've also observed, but also then decided that this could be filtered out by looking at, what time the daily distributions essentially begin. Because what this is trying to establish is, am I taking entries against the sponsorship of the day, essentially. This is more specific with looking at the 4 hour candle closures, whereas this looks at, the true open at large. And so then, having refined this list of 12 to then two, because these two questions were just taken from trades as I was observing, these two questions. Um, from that came essentially 21 insights, because I took 21 trades and I looked at all 21 trades again from these, and focusing then on these two questions. And so for the first question, which was whether 15-minute time-based liquidity sweep occurred in a 4 hour, 1 hour key indicator area, the result was that 14 of the 21 positions swept time-based liquidity within the key indicator area before the move distributed in the intended direction, and a further four swept time-based liquidity before inevitably stopping me out. Um, so essentially meaning that there was a larger portion of trades which swept time-based liquidity. Whether it stopped me out or not wasn't what I was focusing on in this case. But it was more, did we sweep time-based liquidity and then distribute in the intended direction? So we did for 14 of them. Then there was a smaller portion of those which swept time-based liquidity, and then, ultimately the bias was wrong. And an even smaller portion where, there was no time-based liquidity sweep within my key indicator area at all. And so that led me to conclude that this is a crucial tweak to add, which characterizes, a lower risk setup, because it means that a majority of pairs are sweeping price on those micro time frames, sweeping highs, sweeping lows before we either distribute in the intended direction or we get stopped out. But this is a key factor to consider uh, in terms of whether a setup can be rated as high risk or low risk. So that's gone into the plan. I'll show you how in a bit. Then the second one, which was what time does the move begin, which establishes the true open of the day. Um, this one bred a different set of answers. So the green highlighting basically looks at whether the distribution was established earlier in the day, either prior to or at London kill zone, which is a common theme that I've observed. The orange is distributions which were established late in the day, so we correct for most of the morning, and then a direction's established, or um, one direction was established early in the day, and then the opposite was established later on in the day. So we effectively had two, could have had two biases in the day, or two potential trade setups. And then the third is where price was just flat or moved sideways on the day. And so 11 setups established the direction of distribution fairly early in the day near the true open, while 8 setups established the direction of distribution late in the day or had multiple directions of distribution. So I kind of concluded that while I think this is an important observation, it's not one that can add a lot of value to the way I characterize high and low risk setups at this point in time. That mainly being the purpose of this was almost to gauge whether price shows its hand before distributing for the day, and if so, how? And what I almost got was there are a lot of setups where it does do that, but there are a lot of setups where it does it later in the day or it does a full 180. And so I think there's a bit more to continue observing there before I can get to a concrete, um, answer as to how this can add value to my plan. But I think an important observation nonetheless, and still contributed towards the exercise because um, I just decided that this is something that, won't then contribute to how I refine these definitions. And so that was the process that I kind of went through, which then led me to my new definitions of um, how I'll be looking to take setups, which is mainly on a lower risk um, variation in this next 4 weeks. Well, it'll be 2 weeks this year, and then I'll start probably a clean 4 weeks next year, but we'll get into that. So for my 1 hour EPD entries, a low risk alternative entails price retracing deeply to the 70.5 or 79% of the corresponding 1 hour range, and it doing so without protracting with displacement, which forms one-sided fair value gaps. So no one-sided fair value gaps. It can form a two-sided fair value gap, but yeah, very strict on no one-sided fair value gaps. And then the entry is also taken after price has mitigated a 1 hour, 4 hour key indicator area and swept 15-minute time-based liquidity within the key indicator area at least once. So that's where that tweak now comes in. And for my IPTA entries, a low risk alternative entails the current 15-minute time-based liquidity sweep, which will be used for entry, occurs within a 1 hour, 4 hour key indicator area and is preceded by 2 points of liquidity generation that stayed the same. And then the order block or fair value gap price is also trading out of is also has its mean threshold intact. That's also remained the same. So the only thing really is that because with the 15-minute IPTA entry, it always required a time-based liquidity sweep. The only difference is that now that needs to occur within a 1 hour or 4 hour key indicator area. So if it just occurs, but price had not previously mitigated that key indicator area, then there's no trade there. So that's been effectively the biggest tweak to the ban. And I think before we wrap up, I just want to share with you my processes and intentions for the next 4 weeks. Effectively, actually, the next 2 weeks, I need to just modify that. We actually only have two trading weeks left of the year. My last day in the market will be on the 20th of December. That's before I take a 2 week break. I'm also on leave at work, but I think it will just be a good 2 weeks just to disconnect from work a bit, rest, reset the system, you know, get into my habits and rituals for the next year, reflect a bit on, what I'm planning for the following year. My 2025 plan will already be done at that point, so it'll be a lot more rest. And I think a lot of subconscious programming and visualizing and just enjoying life for the last for 2 weeks before we then kick back into gear for 2025. I think that is needed, but I think it looks different for everyone. If you're working throughout December, you know, don't um that's fine. That's also okay. Like I said, it kind of looks different for each individual. If you only have 1, 2 days off and then you're back on it, get it. Get it. Um, but yeah, this is my first December where I'm not studying in 2 years. And previously I would continue trading. I think I'd only take about 3 or 4 days off and then I'd be back on it. So I haven't had a proper 2 week break in a couple of years. And I think there's been a lot of progression this year that kind of warrants that. And so my goal for this plan over the next 2 weeks essentially is to only take low risk variations of my setups. One, to pass phase two of the Alpha Capital $100,000 challenge. While possible, I don't believe probable, just given the time that we have. But, it's not what I believe with the market. I think that's also me trying to be a bit rational. Anything is possible. I just think knowing that I'll naturally be taking less setups because I'm only taking lower risk variations. There may be less trading opportunities, but that may provide setups with higher profit potential. So again, I don't know. Hence, I've left it on here because I can pass phase two of the Alpha Capital $100,000 challenge in this last 2 weeks. Only takes a couple of setups. So we've left that on there. It's a clear intention to what we're still working towards. And the third, which will be to obviously just confirm the hypothesis that I have, is to achieve a higher strike rate than phase one of the trade building protocol, because that to me will confirm that my lower risk variations produce better probable outcomes than my higher risk variations. I think that's going to be an important thing just to clarify and confirm. And just my note for this next phase of the plan will be that these last 2 weeks are crucial. So keep the momentum going. All right. And this is a message to everyone. If you're listening to this, if you're slowing down, if you feel like it's December, I need to switch off, but you're still kind of going to work, even if it's for a week, even if it's for 2 weeks, if it's for 3 weeks, if you've still got work to do this December and you're not in full on holiday mode, these last 2 weeks are crucial. So keep the momentum going. Continue to observe actionable insights, which will contribute to the further refinement of your plan from every aspect which finds an edge. That being namely how I can improve execution, how I can improve management, how I can improve processes, and how I can improve my psychology. Right? Let that sink in, read it again. My processes over this next couple of weeks be continuing on the ICT mentorship. I've got 4 lectures left, two each week. And then I'll also schedule a backtesting block for missed trades in the week. Forecasting setups daily. I know this. We're still in it. Nothing's changed. London session, New York session. That may look a bit different next year. Keep an eye on that because I may modify the times that I trade because there's some interesting things I'm seeing outside of daylight savings. Um, and then a weekly forecast, a trade recap, and a weekly recap will be posted on TradingView. For those of you watching who follow me on TradingView, been lacking this past week or two. I think only posting 3 or so videos where I should be posting 5, one daily. Because of how busy things are this festive, I'll be dialing that back a bit because I just have less time. But I do intend on giving you a weekly forecast, at least one trade recap, and then a weekly recap as to how the market's developed in this last 2 weeks. Uh, I think that'll be good for you, but also for me just to monitor how price behaves over this festive season as we lead up to that Christmas break. And so keep an eye out for that. Link to the description or link to my trading view is in the description for those of you who haven't checked me out there yet. Um, Forming advanced self review weekly, obviously done every Friday evening. Going to continue on that. And then strategy development. This obviously ensures that the processes I'm completing above are being done with intention and that I'm extracting the maximum amount of value possible from the time spent doing each, as it all contributes to the development of my six-figure plan. And so insights will be drawn from every process I do in the form of a physical journal. Um, and that you've seen in the questions, those review questions that I had, um, you know, and the aims to keep observing these key insights into how I can improve my plan for next year, whether I'm forecasting, back testing, doing my weekly ASR. I need to keep that pen and journal, nearby and extract insights that I'm taking note of. Because the more you do it, the more you realize there's always something that you're noting that you're asking yourself about how you can improve your plan. And you just need to observe that and record it in the moment because there's questions that I logged today that I forgot that I even asked myself. And I think that's where a lot of growth can come from your plan. Um, yeah, just going into next year. And then building the modern day trader channel. Obviously, this doesn't change. Keep an eye out for our season finale, if you will, of this year's bi-weekly podcast. I think that will um, just be quite exciting in terms of how we frame next year. But again, this venture just holds us accountable to doing the things we say we're going to do when we're going to do them and spurs us on to become the best version of ourselves as individuals and traders. Um, and so, with that being said, if you made it this far, thank you. Might as well subscribe, like, um, and yeah, just keep tuning in. And there's no point of this, no point of you watching this, no point of you making this far if you're not applying these lessons, these tweaks, into your own plan, because it's not just about, me sitting here documenting this for my own good. You've got to be taking something away from this. Otherwise, then you're just consuming content with no, outcome. So go back, apply this to your own trading, see how it can help you improve. And if it does, come back, leave us a comment. And yeah, we'd just really like to know whether this is adding value to you. And if it is, what about it? What more do you want to see? And that way we can continue to just provide even more value to you guys in 2025 and beyond. Remember, guys, consistency is the choice you make when you start doing the things you know you should be doing day in and day out.